Let me tell you something that took me years of pain to figure out. It is a secret that changed absolutely everything for me. Most people come into this market thinking that success is about finding the magic setup. They think it is about mastering a specific pattern or learning some secret technique that only the institutional pros know about. They spend thousands of hours staring at charts, looking for the Holy Grail. But I am telling you right now, that is not where the money is. Real success in trading comes from one place only. It comes from understanding your own mind. And specifically, it comes from understanding how the size of your position destroys your ability to think clearly. I have spent decades working with traders. I have seen the successful ones, and I have seen the ones who lost everything. I have seen brilliant geniuses fail, men with degrees in mathematics and engineering who could not make a single dollar in the markets. And I have seen average, normal people with no special education build empires. I asked myself for a long time what the difference was. I noticed one consistent fact. The survivors were not the smartest people in the room. They didn't have the most complicated trading systems. They were simply the ones who understood the relationship between risk and clarity. Let me explain what I mean by that, because this is the most important thing you will ever hear about trading. When you first start trading, you bring your real-world beliefs with you. You bring your beliefs about what success is supposed to look like. In almost every other area of life, bigger is better. If you want to build a house, more effort equals more results. If you want to lift a heavy weight, you need more strength. We are taught from a young age that intelligence should be rewarded. We are wired to believe that hard work pays off. These beliefs are deep inside our DNA. They are how we survive in the physical world. So when we come to the stock market, we assume the same rules apply. We think that taking a bigger trade means we are more committed. We think betting big money means we are serious about success. We look at a small position size, risking maybe a few dollars, and we feel weak. We feel like we are playing it safe. We feel timid. We feel like we are wasting our time. But when we put on a huge position size, oh, then we feel powerful. We feel like we are finally doing something that matters. We think this is the trade that changes my life. We think this is the moment I finally break through. But here is the problem. The market does not care about your feelings. The market does not care about your confidence. It does not reward you for trying hard. It does not care how smart you are. The market simply moves based on probability. That is it. It is a cold, unfeeling machine. Your only job is to align yourself with those probabilities. Your job is not to prove you are brave. Your job is to execute your edge over and over again without interference. And interference comes from emotion. And where does emotion come from? It comes from trading a size that is too large for your nervous system to handle. Let me describe exactly what happens in your brain when you take a trade that is too big. I want you to visualize this because I know you have felt it. At first you feel excited, you feel energized. You think this is it, this is the big one, but then the market ticks. Maybe it moves against you just a little bit, or maybe it goes in your favor for a second and then pulls back. Suddenly, something shifts inside your body. Your breathing changes, it gets shallow, your palms start to sweat, your focus narrows down to a single point. You start watching every single tick of the price. Every red candle feels personal. Every move against you feels like the market is speaking to you directly. It feels like a physical attack. This is no longer trading. This is survival. Your brain has detected a threat, not a physical threat like a lion or a tiger, but a threat to your money, your ego, and your safety. When your brain goes into survival mode, it stops being rational. It stops following your trading plan. It creates a chemical storm of cortisol and adrenaline. It starts making decisions based on fear and urgency. You stop looking at the chart structure and you start staring at your profit and loss column. You are mesmerized by the flashing numbers. You start hearing thoughts like this in your head. I should have taken profit when I had the chance. I cannot afford to lose this money. Maybe I should move my stop loss just a little bit to give it room. Maybe I should get out now before it drops more. In the moment, these thoughts feel logical. They feel like you're being smart and protecting yourself. But they are not logical. They are emotional reactions disguised as logic, and the reason you are having them is simple. The risk is too big for your mind to stay objective. You have crossed the threshold of your psychological tolerance. Here is something most traders never understand. Your ability to follow your rules is not a character flaw. It is not about discipline. It is about safety. If your nervous system feels safe, following rules is easy. You execute without thinking. You see the setup, you take the trade. But when you are afraid, following rules is impossible. Fear overrides logic. It is designed to do that. If a tiger is chasing you, you do not stop to calculate the best route. You run, you react. You do whatever it takes to survive the next 10 seconds. And when your position is too big, a losing trade looks like a predator to your brain. This is why traders make the same mistakes over and over again. You promise yourself you will not do it next time. You write it down in your journal. You swear on your family that you will follow your plan. But then Monday morning comes, you load up the boat, and you make the same mistake again. It is not because you are stupid. It is because you are putting yourself in a chemical state where you have no choice but to fail. Let me walk you through the 4 most common mistakes that come from trading too big. Mistake number 1 is hesitation. When the risk is too big, you start second-guessing every entry. You see your setup, you know it is a valid trade. But you freeze. You tell yourself, I need more confirmation. You talk yourself out of it. You look for reasons not to take the trade. And then the trade works. It goes exactly where you thought it would. You feel frustrated. You feel angry at yourself. So you promise, I will take the next one, but the next one also feels risky. So you hesitate again. Or worse, you jump in late, right at the top, out of FOMO, and you get stopped out immediately. This cycle destroys your confidence. And it happens because the fear of the loss paralyzed you. Mistake number 2 is moving the stop loss. This is the account killer. This is the reason most people blow up. And it almost always comes from oversized positions. You place a trade with a logical stop loss. At the time it feels fine. But then price gets close to your stop. Suddenly that loss feels unbearable. You cannot accept it. It is too much money. It represents your rent, or your car payment, or your pride. So you move the stop further away. You tell yourself, I still believe in this trade. I just need to give it room to breathe. But that is a lie. The real reason is that the pain of taking the loss is too high. By moving the stop, you turn a small, manageable loss into a catastrophic disaster. You violated your risk management because your emotions took the wheel. You are bargaining with the market, and the market always wins that negotiation. Mistake number 3 is cutting winners early. When you have a massive position on, profit feels fragile. You see green on the screen and you are terrified it will disappear. You are vibrating with anxiety. So the moment the trade moves in your favor, you feel an intense urge to lock it in. You want to relieve the pressure. You want to feel safe again. So you exit the trade way too early. You take a tiny profit on a massive risk. And then you watch the chart continue to fly in your direction without you. You left thousands on the table because you were too scared to hold. This is not a strategy problem. It is a sizing problem. If the position was smaller, you would not have felt that urgency. You would have let it run. Mistake number 4 is holding losers too long. This seems like the opposite of cutting winners, but it comes from the same fear. When a trade goes against you and you are risking too much, you freeze. You become a deer in the headlights. You disconnect from reality. You hope it will come back. You pray to God. You tell yourself it is just a pullback. It has to turn around. You hold through your stop loss. You hold until the pain is so great that you finally exit at the bottom. By the time you get out, the damage is done. Your account is ruined and your psychology is broken. All of these mistakes have one root cause. The position was too large for your mind to handle. Your mind was trying to protect you by taking control away from your rules. You are trying to lift a weight that is too heavy for you, and your muscles are failing. Now, let me tell you what happens when you flip the script. Let me tell you what happens when you trade with a smaller position size, a size that feels almost too small, a size that does not make your heart race, a size that your friends would laugh at. First, you become emotionally neutral. When the risk is small enough, the trade stops being personal. It is just a trade. It is just an execution. It is just data. You place the trade, and you do not obsess over it. You do not stare at the screen. You manage it according to the rules, but you do not attach your self-worth to the result. This is the state where professional trading happens. This is the zone. Second, you can follow your rules without conflict. Your stop loss makes sense, so you honor it. Your target makes sense, so you wait for it. There is no voice in your head arguing with you. There is no negotiation. There is no drama, just calm execution. You become a machine. And in this game, the machine always beats the human. Third, you let probabilities play out. This is the most important part. Trading is a game of math. Your edge is not that you win every trade. Your edge is that over 100 trades, your system makes money. But for the math to work, you have to let it work. You have to execute consistently. The only way to do that is to trade at a size where one individual trade does not matter. When one trade is just one of 1,000, you stop trying to control the outcome. You stop needing to be right. You just execute. And you let the numbers do their job. You stop looking at the micro perspective, and you start seeing the macro perspective. Fourth, consistency becomes possible. With small size, you can show up every day. You are not burnt out. You are not traumatized. You build a track record based on process, not luck. And over time, that consistency compounds. Not because you are taking huge risks, but because you are avoiding huge mistakes. You are staying in the game. Let's talk about ego for a minute, because this is where you are going to get stuck. This is the hardest part. Trading small feels like you are not trying hard enough. It feels like you are settling. If you are a competitive person, if you are used to winning in life, trading small feels wrong. You think real traders take big risks. You think confidence means betting big. You look at social media and you see people posting massive gains, and you feel inadequate. You feel like you are falling behind. That is your ego talking. That is not your rational mind. Your ego wants to feel significant. It wants to be a hero. It wants to post a screenshot of a massive win. It wants the validation of others. But the market does not care about your ego. The market rewards the trader who can remove ego from the equation. The market rewards the trader who can execute without needing to feel powerful. The trader who can accept small wins and small losses and just keep moving forward. Here is the truth your ego hates. Trading is not personal. The market is not testing you. It is not judging you. It is not rewarding your bravery. It is just moving. When you take a big position, you make it personal. You turn a math problem into a test of your worth as a human being. And that is a game you will lose every time. You are trying to fight an ocean with a sword. There is another reason people trade big. It is the illusion of control. They think if I risk more, I can make more money faster. If I focus hard enough, I can make this trade work. But this is a lie. You do not control the market. You do not control the next candle. You do not control if this specific trade wins or loses. The only thing you control is your entry, your exit, and your risk. That is it. And the bigger your position, the less control you actually have. Because the bigger the position, the more your emotions hijack your brain. Small size is not giving up. Small size is reclaiming control. It is taking control back from your fear. Let me share something that separates the professionals from the gamblers. The goal is not to make money, not at first. The goal is to survive. Survival means staying in the game. It means not blowing up your account. It means not quitting because you are emotionally broken. Survival requires humility. It requires patience. When you trade big, you are prioritizing results. You are trying to force the market to pay you. When you trade small, you are prioritizing process. You are saying, I am going to protect my capital. I am going to protect my mental health. I am going to give myself time to learn. And here is the magic. Survival leads to profit. not because you hit a home run, but because you allowed compounding to work. Most traders misunderstand compounding. They think it means doubling your account every month. No, compounding is what happens when you execute consistently over a long period without blowing up. It is the natural result of not making catastrophic mistakes. When you trade too big, you interrupt compounding. You have a good week and then you give it all back in one bad trade. You take one step forward and two steps back. You are running on a treadmill. But when you trade small, you stop self-sabotaging. You show up day after day. You let the edge work. And over time, small gains add up to something massive, not because any single trade was huge, but because you stayed in the game long enough to win. You need to understand the math of ruin. If you lose 50% of your account, you need to make 100% just to get back to break even. That is a hole that is almost impossible to dig out of. But if you lose 1%, you only need to make 1.1% to get it back. You are always within striking distance of new highs. I want you to really understand this. A good system might win 60% of the time. That means you will lose 40% of the time. If you are trading too big, those 40% losses will destroy you. They will shake your confidence. They will make you change your strategy. But if you trade small, those losses are just data. They do not hurt. They do not mean anything. They are just the cost of doing business. When you can accept a loss without feeling pain, you have mastered the game. And you can only do that if the position size is small. I have watched successful traders. They are not the ones with the most exciting war stories. They are not the ones who got lucky on a crypto coin. They are the ones who are still here. They're durable. They trade in a way that does not burn them out. They trade in a way that is boring. Excitement is overrated. Excitement is just another word for emotional intensity. And emotional intensity is the enemy of trading. What you need is calm. What you need is clarity. What you need is consistency, and you get that by trading at a size that feels boring, a size that does not spike your adrenaline. Let me bring this all together for you. Trading is not about making money directly. Trading is about executing a process that has an edge. Your job is to execute that process as cleanly as possible. No interference, no drama, and the only way to do that is to remove the emotional intensity. And the only way to remove the intensity is to reduce your size until your survival instincts turn off. When the risk is small, you can focus on the right questions. Did I follow my plan? Did I manage the risk? If the answer is yes, then you succeeded, even if the trade lost money, because in the long run, good execution leads to good results. So I want you to change how you measure success. Stop measuring it by how much money you made today. Start measuring it by how calm you were. Measure it by how well you followed your rules. Let me tell you what happens when you finally embrace small position sizes. You feel free. Free from the anxiety. Free from the sleepless nights. Free from the fear of ruin. You can place a trade and walk away. You can let it work. You can take a loss and smile. That freedom changes everything. When you are free from fear, you can finally see the market clearly. You can execute without hesitation, and that is when trading becomes what it is supposed to be. Not a battle, but a calm, methodical business. So here is my challenge to you. For the next 30 days, I want you to cut your position size in half. And if you still feel anxious, cut it in half again. Trade so small that the money is meaningless. Trade so small that you are bored. And watch what happens to your execution. Watch what happens to your consistency. You will stop fighting the market and you will start flowing with it. Trading is hard enough. Do not make it harder on yourself. The market is unpredictable, but your process does not have to be. Trade small, smaller than feels significant, smaller than feels exciting, small enough that you can survive. Because if you survive long enough, the results will take care of themselves. That is the truth about position size, and it is the only truth that will save your trading career. Do not let your ego drive the bus. Do not let your fear make the decisions. Take back control. Start today. And remember, The goal is not to get rich this week. The goal is to be here next year. The goal is to be the last man standing. That is how you win.